Good morning, ladies and gentlemen, guests and audience. We are about to begin our ceremony. Please have a seat and make yourself comfortable. Thank you. Assalamualaikum warahmatullahi wabarakatuh, and good morning to our respected panel, Dr. Noraziah binti Arshad, and my fellow university mates from the Faculty of Economy and Muamalat and representatives from other faculties and universities. All praises to Allah Subhanahu Wa Taala for giving us a chance to gather virtually through this Zoom platform to participate in this FISM 2023 program. With the title The Revolution of Currency, I, Nur Ain Sophea, will accompany you throughout this session as your moderator for this morning. For your information, we will have a quiz related to our discussion topic at the end of this slot. Before we go through our topic, I would like to formally introduce all of you a little insight into our panel's career path. Dr. Noraziah first embarked on the journey for knowledge expansion by taking a degree in economics from Universiti Utara, Malaysia, and since then, she has continued her journey in economics for her master's degree at the Universiti Kebangsaan Malaysia. Then, she finalized her academic journey by finishing her doctorate degree in risk management of Islamic financial institution from the University of Malaya. Upon completing her studies, she later jumped into the education field and had been teaching at UUM from 2018 until now, currently holding the position of senior lecturer. In order to engage with her students, Dr. Noraziah puts a lot of effort into her teaching by embracing creativity and innovation. In addition to that, she is also the executive editor of the International Journal of Islamic Business, IJIB, and is active in master and PhD supervision. Her expertise encompasses publishing more than 15 journals focusing on Islamic finance, Islamic banking, Islamic economics, and risk management. Besides, Dr. Noraziah has a professional qualification, Islamic Financial Planner, awarded by Islamic Banking and Finance Institute Malaysia, FEM, in 2011, and a certified qualification in Islamic Finance, CQIF, Wealth Management in 2021 from FEM, and Financial Planning Association of Malaysia, FEAM. She also won many honors and awards for her effort and energy spent on the path of knowledge. Without further ado, I would love to invite our respected panel, Dr. Noraziah binti Arshad, to deliver her talk on the topic of the revolution of currency. As a reminder to all participants, there will be 10 to 15 minutes of Q&A session with the panel. During this time, participants may ask anything regarding to this topic to the panel. Now, let us welcome Dr. Noraziah. The floor is yours.
Alhamdulillahirabbil alamin. Thank you very much to Miss Ain Sophea as a moderator for today's event and distinguished participant. I would like to welcome everyone to this event. Looking forward to impact the knowledge for exploring the dynamic of currency and economy influence after the end of these sessions. I'm very happy to be here to be sharing the knowledge about the topic given to me related on the revolutionary of the currency, inshallah. Okay, but before that, I need to get the permission to share the slide. Okay. All right. Okay. All right. Okay. So you can get my slide, right? You can see my slide.
Yes, Doctor.
All right. Okay, Alhamdulillah. When we talk about so this is basically my topic. This is basically my topic related on the revolutionary of currency. Revolutionary of the currency. When we look at based on this idea, The revolutionary changes in currency refer to the transformative shift in how we perceive, in how we use, and in how we manage money and financial transaction. So these changes are driven by technological advancement, shift in customer behavior, and also involving economic landscape. So that's why, based on that topic, here are some ideas I would like to share regarding on the revolutionary changes in currency. I will start with a brief introduction to the evolution and the features of the currency. And the second part shall explore the monetary system and monetary policies. And the third part will present the currency in circulation. And the last part, the final part, shall draw the impact of the currency on the economics. Okay, so we start with the evolution of the currency itself. When we look at this on this figure, so this is basically the evolution of the currency has played a crucial role in the development of human societies and their economic system. So when we talk about the money, the currency itself has transformed human society, enabling commerce and trade event between widely dispersed geographic locations. It allowed the transfer of wealth and resources across space and over time. So when we look at this on the currency has evolved significantly over time, transitioning from simple barter system to complex form of money used in modern economies. So let's us explore or investigate into the evolution of the currency throughout the history, starting with the barter system. Okay, when we look at this on the barter system, or we can call it the prehistoric time to ancient societies, we need to understand what are the meaning of the barter. Okay, the barter itself. Before the hard currency came into existence, the most common form of trade was bartering. So the barter system was used in the old time when there was no money. The only way to buy goods was to exchange them with personal belongings of simple value. For example, a farmer gives his cattle in exchange for some land and so on. So it is clear that in time where people did not have the ability to keep a sufficient store of value, they had to adapt to circumstances and exchange what they had in order to receive things they need for every living. So this form of money is called the barter system. So this system principally defines the exchange of goods and services against other goods and services. So it was a typical hunter-gatherer form of exchange between the individual occupations. For example, a fisherman had a lot of fish, however, no grain to exchange for. And on the other side, there was a farmer which had a lot of grain. However, no fish to eat. So these two come to an agreement to exchange the fish against the grain in order to fulfill both side needs. So one of the most important factors of the barter system is having the equal value of the goods and services that are to be exchanged. Therefore, in the earliest human society, people engage in bartering, which involve the direct exchange of goods and services without a standardized medium of exchange. So there are some benefit of barter system, okay, especially when we look at based on the budgeting. So the barter system facilitates good financial budgeting, as the less important goods can be exchanged for the prioritized service and goods. While on the other hand, the cash can be kept saved for the expenses that cannot be met through bartering. Therefore, it helped to budget all the expenses and economically. So what else? When we run the barter system, the other benefit when we look at this on the barter system is better professional relationships. Bartering not only help in to trade if without cash, but also help to creating a good physiological understanding and relation among the traders as compared to the monetary transaction. For example, I understand or I have what you want, and you understand and you have what I want. Therefore, it helps to expand the business network and relationships. Okay. However, barter system also were inefficient. Why? Due to number one, related on the double coincidence of one. So that basically the problem when we use the barter system. Double coincidence of one. Owning to lack of generally acceptable medium of exchange, a difficult problem of double coincidence of one was faced by the person who wanted to sell and buy goods. So for exchange of goods, persons desiring to exchange goods must specifically want those goods what other offer in exchange. Thus, an individual who want to have a good, he or she must locate another person who offers to give up the goods wanted by him and who is willing to accept in exchange the good offered by him. Thus, under barter system, only when one for buying and selling good of different person coincided, the exchange of the good was possible. A good deal of time was spent by a person in searching for a man with whom one coincided. Another problem when we look at this on the barter system is a lack of a standard unit of account. Right? When a barter economy lack not only a common medium of exchange, but also a standard unit of account in which price could be measured and quoted. So in the absence of the common unit of account, the number of exchange ratios between goods would be very large. For example, I give you an example. 2 cows for 1 horse. 1 cow for 2 quintal of wheat, and so on. Thus, lack of a standard unit of account with which to measure values of different goods and services made exchange or trade difficult. It is evident from the explanation that barter system could work in a primitive economy where life was simple and man was self-sufficient. As man made some economic progress, division of labor or specializations and large-scale production came to exist. So the barter system could not fulfill the increasing needs for exchange of goods. Due to the difficulties of the exchange barter economy, would have no large-scale production, the range of goods produced must be much smaller than those produced in the modern development economies. So to meet the needs of a common unit of account and also as a generally accepted medium of exchange, and thereby to overcome the difficulties faced under the barter system, money was or currency was invented. And the second, next evolution related on the commodity money. As societies advance, they began using difficult commodities with intrinsic values, such as precious metal or others valuable items as a medium of exchange. Okay, for example, when we look at in ancient Rome, the Roman moved on to keep salt as a store of value and exchange for goods and services. Because salt is easily divisible, it can be stored for a long period of time. It was expensive and labor intensive to produce, therefore limited in quality. So besides that, it was widely consumed by everybody. Additionally, to salt, many other forms of this commodity money emerged, such as cattle, rice, sugar, or tea. So these all commodity which can be stored over a long period and exchanged properly. So the value of this commodity was widely recognized, making them acceptable for trade. So when we look at this on the commodity money, is a type of money that has intrinsic value. Means that its value is derived from the value of the commodity that is made from. And when we look at this on the definition of the intrinsic value, refer to the inherent value that a commodity possesses independent of its use as a medium of exchange. So together with this new gain advancement, it was a step in the right direction. Nevertheless, there remain significant negative aspect in the commodity money. These are various things, such as some form of cattle are very difficult to store because they need to be fed constantly and cannot obtain a passive store. Other form like cowrie shell are fragile and need to be transported carefully. Besides this storing problem, it was always difficult to transport over a long route as the commodities can take up so much room that it was simple to practicable to transport them over long distance. Also, this existed not universal acceptability. So the two exchange partners need to agree on the exchange of this commodity to come up with a deal. So that basically when we look at this on the evolution in the time of the commodity. Next, when we look at this on the metallic standard, okay, or we can call it metallic money. Over time, society started using a precious metal like gold and silver to create a standardized coin of no weight and purity. So this metallic standard provided more uniformity and trust in the currency's value, encouraging its widespread use. These coins were stamped with specific value and became widely used in ancient civilizations, such as in Greeks, in Roman, in China. When we look at this on the Byzantine Empire and various European kingdoms during the medieval and Renaissance period, adopted metallic standard for their currency. So when we look at this on the metal money was a true revolution in the money evolution, and the store speak for itself, as it is still today widely accepted and a sufficient store of value, with gold and the silver holding its values. Against the commodity money was stable, had an inherent value, as it is rare in nature as well. Its supply is limited. So the perfect characteristic for a natural store of value and also exchange value. When we look at this on the time, the metallic money shaped into different form, like the situation where goldsmiths pack the gold and give people a trust which they can exchange in order to receive goods and services. So the people came into the goldsmiths and bought basically gold for which they received the document to pay with. The only problem with this system was the goldsmith created an ethical money transaction and keep spending them. Beside this form, there was the legal currency in Rome, for example, with gold coin issued by the empire. However, the problem in this case was that it got corrupted over time, as the people mix more cheap metal like copper with the gold coin to get a higher supply. And when we look at this on the Islamic situation at that time, at the time of our Prophet Muhammad SAW, two types of currencies were in circulation, notably dinars and dirham. So the prevailing exchange ratio was 1:10. During the period of the Rashidun Caliphate, neither dinar nor dirham were issued in Arabian Peninsula at the time of Prophet Muhammad SAW. So the dinar was the gold coin used as a currency by the Roman Byzantine Empire, while the dirham, a silver coin, was the currency of the Persian Empire. Okay. So, okay. Okay. All right. So when we look at this on the Islamic concept of currency at that time, money is considered the blood of the economy. According to the Islamic economic principle and contrary to the conventional concept, money has no intrinsic value. But money is only a medium of exchange and store of value. It is used as a medium of exchange, as a unit of account, as a store of values, and also a standard of deferred payment. However, the concept of money from the Islamic perspective is somehow different from the conventional perspective. Unlike in conventional economy, money cannot be considered as a commodity on its own in Islam, and thus cannot be entitled to any return when traded on loan. Therefore, the conventional definition of interest as a return paid for the use of money is acceptable in Islam. Because when we look at this on the term interest, usury, or riba, is indeed forbidden, which is stated clearly in Al-Quran in Surah Al-Baqarah, verse 275. Trade is like usury, but Allah has permitted trade and forbidden usury. Like when we look at this on the Surah Al-Baqarah, verse 275. ذَلِكَ بِأَنَّهُمْ قَالُوا إِنَّمَا الْبَيْعُ مِثْلُ الرِّبَا وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا. Okay, trade is like usury, but Allah has permitted trade and forbidden usury. So this ayah, this verse shows that Allah forbid the practice of usury, the practice of riba. Why? This is because if we compare usury to trading or business, buying and selling, both the potential for loss and the profit potential to exist in trading. So a trader's tangible, concrete feedback is also necessary. Contrarily, transactions involving a surcharge are intended to ensure profit for the lender regardless of the outcome. So under no circumstances are any transaction featuring a guaranteed return for the lender permitted because they constitute usury. So the absence of guaranteed return is the first of many factors Allah has allowed trading for, making it advantageous for human life. Consequently, Islamic monetary policy, which cannot be based on manipulation of interest rate, would differ from its conventional counterpart in many respects, and its implication for monetary and real sector of the economy will differ as well. Okay. Next, the evolution when we look at this on the paper money. Okay, the transition from the metal coin to paper money began around in the 7th century in China. The emergence of the paper money is attributed to China during the Tang Dynasty, where the merchants and the government issue paper certificates representing claims to a certain amount of precious metal stored in a central repository. So these certificates could be exchanged in place of physical metal, reducing the need to carry heavy coins during the trade. So the use of paper money spread to other parts of the world over time. So when we look at this on the paper currency become popular. However, initially it was backed by gold. For example, the gold standard. Many currencies have established holding the money as it is issued by certain central bank, such as the US dollar by the Federal Reserve System or the euro by the European Central Bank. The problem here is that this money is printed by will, and the central bank have the ability to just print more when the time is needed to do so. However, there are many advantages of a paper money, and the creation of it as a means of exchange was often a result of circumstances, practical considerations. So when we look at this on the benefit of the paper money is easily moved, where the weight of the paper money is negligible, meaning that larger amount of money can be moved. Of course, this was not the case with gold and copper, which is what lead to the creation of the paper money in the first place. And when we look at this on the benefit also, when we use the paper money, is easier to count. Okay, where this advantage of the paper money at that time is you will appreciate how much easier it is to count paper money than coin. A quick lick of the finger is all that you need to be into, let's say, the 100 or the 1,000 of ringgit, for example. Okay. And then when we look at based on the plastic money, we move the plastic money, okay, in the 1920th. The printed central bank money move into the account money, especially backed by the payment provider in the individual credit or debit card. So the plastic money in the short term is money that is in a plastic form, which means you can use it without having to carry the money with you. Right? It's just a card that you can swipe and the money is transferred from your account to the other person's account. There are no restrictions on what you can purchase with your plastic card. However, some merchants may not accept certain type of card. So it's important to review the terms and condition of your specific card before making a purchase. So the phrase plastic money was coined when credit cards were introduced. The cards were made of plastic, which was a new material at that time. Plastic money is also used to describe debit card and prepaid credit card. So there are pros and cons to use plastic money. The pro is that it's more convenient than carrying cash. It can help you stay with your budget. And it can make buying things online easier. The cons are that it can be easy to overspend. It can be hard to track your spending. And there are some risks associated with using credit card, such as identity thief. So when we look at this on the plastic money, the plastic card, there are many types of plastic money. The most common are credit card and debit card. So what are the difference between credit card and debit card? When we look at this on the credit card are issued by bank and allow consumer to borrow money up to a certain limit in order to purchase item or withdraw cash. So these cards are also are also known as charge card. So the credit card can be used to purchase item at a store or to withdraw cash from an ATM. Okay. However, when we look at this on the debit card allow customer to spend money that they already in their bank account. When a debit card is used, the funds are transferred immediately from the customer's bank account into the merchant's account. And debit card also can be used to make purchases at a store or to withdraw cash from an ATM. Okay, so that basically when we look at based on the types of the plastic card, the plastic money. Okay, and then we move with the e-money, or we can call it mobile money. Actually, monetary value stored in an electronic device that can be used to make payment across retailer and purposes. So a form of cashless retail payment, when we talk about the e-money. However, the term of the e-money, the question comes, what is the difference between e-money, between mobile money, mobile banking, and a range of other items that are often used in reference to this emerging business opportunity? Okay, so when we look at this on the e-money, okay, electronic money, simple put, electronic money, e-money, is the electronic alternative to cash. It is monetary value that is stored electronically on receipt of fund, and which is used for making payment transactions. So e-money can be held on card, can be held on device or on a server. For example, include prepaid card, electronic purses, electronic purse, or web-based services such as PayPal. As such, e-money can serve an umbrella terms for a number of more specific electronic value products and services. How about mobile financial services? Mobile financial services is another broad term that refers to a range of financial services that can be offered across the mobile phone. So when we look at this on the mobile financial services, three of the leading form of mobile financial services. For example, mobile money transfer, mobile payment, and mobile banking. What are the difference? When we talk about the mobile money transfer, services whereby customer use their mobile device to send and receive monetary value, or more simply put, to transfer money electronically from one person to another using a mobile phone. Both domestic transferred as well as internationally or cross-border remittance, money transfer services. So that basically when we look at based on the mobile money transfer. And then when we look at based on the mobile payment, while mobile money transfer address person-to-person money transfer, however, when we look at based on the mobile payment, refer to person-to-business payment that are made with a mobile phone. So that basically related on the mobile payment. How about mobile banking? Mobile banking, the connection between a mobile phone and a personal or business bank account. So mobile banking allow customer to use their mobile phone as another channel for their banking services, such as deposit, withdrawal, account transfer, bill payment, and balance inquiry. So another term, when we look at this on the e-money, we also heard about the electronic wallet, e-wallet. So the e-wallet refer to the cash value that is stored on a card, on a phone, or other electronic device. For example, prepaid card are one from form of electronic wallet. So electronic wallet can represent a fixed value. In this case, once the value has been spent, the card can no longer be used, or wallet can be reloaded to be used again and again. So the term wallet here is used because the card or phone is considered a substitute for the cash normally carried in the person's wallet. So that basically the evolution. And the last evolution, when we look at based on the cryptocurrency, okay, starting with 2009 till today, the virtual currency system in the form of cryptocurrencies is a recent phenomenon. It is a decentralized system of money creations. Because when we look at this on the cryptocurrency, is any form of the currency that exists digitally or visually and uses cryptography to secure transactions. So the cryptocurrency do not have a central issuing or regulating authority. Instead, using a decentralized system to record transactions and issue new units. The first cryptocurrency was Bitcoin, which was founded in 2009. With the advancements of the technology, the digital currency have gained prominence. The digital currencies such as cryptocurrency, for example, Bitcoin, operate on decentralized blockchain technology. So this innovation offer faster and more convenient means of conducting financial transaction. This is the most innovations so far, like Bitcoin, like they invented, are limited in supply and can only be created through the mining process and proof of work. They provide a sustainable interface within the blockchain, which transactions are scalable and easy to use for peer-to-peer transaction. So the cryptocurrency marked the point in the history of the money evolution, where money advanced significantly from its initial barter exchange system to cryptocurrency. So this is a major step. And as for now, central banks are looking also into cryptocurrency and blockchain technology to implement their own central bank digital currency. Okay. So the next part, I need to share about the desired features of the currency. Okay, the desired features of the currency. The currency system suitable to a modern economy, especially on the Islamic economy or welfare economy, is expected to meet the following requirement. The first one, when we look at this on the desired features of the currency, is acceptability. What means acceptability? The currency should be generally acceptable by crowd. Anything that is considered haram or non-permissible and which Muslim community, for example, would not like to keep or use is not recommended to be used as a currency. Okay, so acceptability comes through either the intrinsic value of the product used as a currency or by the legal process. Okay, legal process. So in the case of inherent value, okay, acceptability is free from any legal compulsion and geographically boundaries. Hence, ideally, a currency should have inherent values, okay, acceptability. And then the features of the currency also is a measure and store of value. Measure and store of value. Money or currency is expected to serve as the measuring element for the value of goods and services, as well as the store of values. So in order to be a medium of exchange, currency or money must hold its value over time. That is, it must be a store of value. People can hold currency as a store of value to preserve purchasing power for future use. So the stability of the currency's value is crucial for its effectiveness as a store of values. Okay. Number 3, related on the durability. Another features of a sound currency is its ability to be storable and long-lasting. Anything with a lesser amount of life and that require huge space and expenses for storage is not recommended to be used as a currency, such as fruit, vegetable cannot be used as a currency. Okay, so that related on the durability. Next, related on divisibility. Okay, divisibility. A currency should carry the features of divisibility to the minimum level for the exchange of daily consumption of goods and services. Nothing can be used as currency, which cannot be divided into smaller denominations, like horses, like car, like building. So that meaning divisibility. A currency should carry the features of divisibility to the minimal level of the exchange of daily consumption of goods and services. Next, the features of the currency also related on the stability. Stability in the price of an item which is used as currency is a necessary feature. It is crucial because money is a source of wealth transfer. And an unstable currency with frequent fluctuate in price will not serve the purpose. For example, equity share of the company traded on stock exchange cannot be used as a currency because of extended variation in prices. Okay, stability. Okay, and then the next features of the currency. Related on the transferability. Transferability, another essential of features of a sound currency, is easy transferability from one person to another person and place to place. Hence, immovable goods such as building and lands cannot be used as a currency. So these features of money is required due to the mobility of person, the mobility of people be used as a currency. So these features of money is required due to the mobility of people for business, for education, for health, for tourists, even as a pilgrimage to blessed place and international trades. Okay, so that basically when we look at based on the transferability. Flexibility. So when we look at based on the flexibility, a sound currency system need to be flexible enough to cater a seasonal needs and the currency supply required for the desired output level in the economy. So the currency can be increased or decreased as per the demand of the macroeconomy of a nation. When there is more production of goods and services, there should be more currency available to measure the output and facilitate payment. Likewise, when economic activity are slow, the output and facilitate payments. Okay. Likewise, when economic activity are slow here, the quantity of the currency may be reduced. Otherwise, based on the established theory of the money quantity, price of output will increase and decrease merely due to the supply of money. And the last one related on the security. An added features of the currency system is built-in security. Given the threats of losses due to thief, due to fire, flood, and accident, and etc., and available resources to secure the money. So that basically the idea related on the features of the features of the currency. So next we look at based on the monetary system. The monetary system, we look at based on the monetary system is the set of institutions and arrangement that support monetary exchange. It's considered money and payment system. Starting with the evolution here, starting with the gold standard, 1870 to 1913. At that time, the gold standard provided the answer in the pre-World War I period. Okay, a period characterized by free capital flows and fixed exchange rate. And here, no independent monetary policy. Okay, so at the gold standard, the decades before World War I, we can call it the gold standard. Historically, the most important fixed exchange rate system was the gold standard, which was used off and on. So in this system, each country defined the value of its currency in terms of a fixed amount of gold. thereby establishing fixed exchange rate among the countries on the gold standard. For example, when we look at this in the United States, adopted the gold standard in 1979 and defined the US dollar as 23.22 fine grain of gold. Similarly, in the British pound at that time was defined as pound sterling equal to 113 grains of fine gold. So it looked around 4.24 to equal 1 ounce of gold. Exchange rate were fixed for all countries on the gold standard, where the exchange rate for different currency were determined by the gold content of their monetary units. While the gold standard require no government interventions in trade or foreign exchange, where the government does have an obligation to keep gold contents of its currency. So the gold standard essentially involves a commitment by the participating country to fix the price of their domestic currency in terms of a specified amount of gold. Okay, but why did the gold standard fail at that time? The outbreak of World War I was a direct cause for the collapse of the gold standard. Governments abandoned the gold standard during the war and financed part of their massive military expenditure by printing money without the backing of gold. Further, labor force and productive capacity had been reduced sharply through war losses. As a result, price levels were higher everywhere at the war's conclusion in 1918, where the loss of confidence in the British pound at that time as a preserved currency was another reason. So the reserve currency is one that the central bank hold in their international reserve, and under a fixed exchange regime, each nation central bank fix its currency exchange rate against the reserve currency by standing ready to trade domestic money for reserve asset at the rate. Okay, so we move with the interwar period, times 1925 to 1939. During the interwar years, several countries returned briefly to gold standard. But as the Great Depression continued, many countries renounced their gold standard obligation and allow their currency to float in the foreign exchange market. So that happened at that time, interwar period. Inflation was extensive in some economy at the end of World War I. The most celebrated episode in the interwar inflation in the German hyperinflation, during which German's price index rose, increased. So the loss of the confidence in the UK, for example, the existence of multiple reserve currency, pound, dollar, francs, and the hyperinflation in Germany all contributed to the failure to restore the gold standard. So at that time also, the depression of the 1930s, followed by the war, had much diminished commercial trade, where the international exchange of currency and cross-border lending and borrowing. So the world needed a stable and cooperative system and mechanism to facilitate trade and investment, and to assist the reconstruction of the war-torn economies and the adjustment of balance of payments. And then move to the Bretton Woods. 1948 to 1972, where in July 1944, representative of 44 currency met in Bretton Woods at New Hampshire and signed the Article of Agreement of the International Monetary Fund, known as the Bretton Woods Agreement. So the Bretton Woods Agreement attempted to recreate key part of the gold standard and produce a fixed but adjustable exchange regime, which was implemented in 1949 and 46. Okay. So this agreement recognized the more important role of US in world economy and incorporate the US dollar in international reserve. So at that time, the two important international financial institutions, the first one, the International Monetary Fund, IMF, and the World Bank, were born out of Bretton Woods Agreement. So an integral part of the Bretton Woods system was the establishment of the IMF, which still administers an international monetary system and operate as a central bank for central banks, where member nations subscribe by lending their currency to the IMF. The IMF then relend this fund to help country in balance of payments difficulties. So the main function of the IMF is to make temporary loan to country to help them tide over difficult with current account deficit and financial crisis. Okay, and then move with the post-Bretton Woods, 1973 to 2010. The collapse of the Bretton Woods system in the earliest 1970s led to the introduction of the prevailing system of floating exchange rate, free capital flows, and independent monetary policy in the major advanced economy. So within this post-Bretton Woods framework, the monetary policy framework also transitioned from a monetary targeted regime in the 1970s and the 1980s to inflation targeting framework. Because after the collapse of the Bretton Woods system, while allowing their currency to float against the dollar, for example, the European Union, EU country, try progressively to narrow the extent to which they let their currency fluctuate against each others. So at that moment, it was replaced by hybrid system. The major economic regions, for example, United States, Euroland, Japan, have currencies that float relative to each other. Most small currency peg their currency to the dollar or to other currency. Okay, so when we look at this on the evolution monetary system, we need also to understand about the monetary policy. So this is basically, I need to share the overview of the monetary policy in Malaysia, especially where when we look at based on this country in Malaysia, the responsibility for formulating and implementing monetary policy is entrusted to our central bank, Bank Negara Malaysia, as the nation's central bank. So the Central Bank of Malaysia Act 2009 stated that one of the principal objects of Bank Negara Malaysia is to promote monetary stability conducive to the sustainable growth of the Malaysian economy. So in promoting monetary stability, Bank Negara Malaysia is mandated to pursue a monetary policy which serves the interests of the country with the primary objective of maintaining price stability, currency stability, while giving due regard to the development of in the economy. So Bank Negara Malaysia, through its Monetary Policy Committee, okay, executes its monetary policy responsibility by adjusting its policy interest rate. For example, OPR, overnight policy rate. Okay, so the OPR is the sole indicator used to signal the stance of monetary policy and is announced through the monetary policy statement released after the monetary policy committee meeting. So when we look at this on the monetary policy, in promoting monetary stability, the bank shall pursue a monetary policy which serve the interests of the country with the primary objective of maintaining price stability, giving due regard to the development of the economy. So that's why when we look at this on this figure, they have the monetary policy committee. What are the purpose of the monetary policy committee? They shall a committee of the bank to be known as the monetary policy committee, which shall have the responsibility for formulating the monetary policy and policies for the conduct of the monetary policy operations. The monetary policy committee also shall consist of the governor, the deputy of the governor, and not less than 3, but not more than 7 other members under monetary policy committee. And under monetary policy also, they have a publication of the monetary policy statement. Following each meeting of the monetary policy committee, the bank shall publish a monetary policy statement on the decision made at the meeting and the rationale for such decisions. After that, we look at this on the monetary policy operations. In this part, monetary policy operations means any transaction undertaken by the bank to manage liquidity in the financial system, where the monetary policy committee shall establish general principle, guidelines, and terms and conditions for the monetary policy operation carried out by the bank under this part. So that's why when we look at this on the monetary policy process, under the Central Bank of Nation Act 2009, which came into force in 2009. Formally institutionalized the monetary policy formulate procedure that have been established since the beginning of the decade. So this act stipulate that monetary policy shall be autonomously formulated and implemented by Bank Negara Malaysia. So the objective of the monetary policy is also articulate with greater clarity in promoting monetary stability. The bank shall pursue a monetary policy which serve the interests of country with the primary objective of maintaining price stability, giving due regard to the development in the economy. So this act also formally and legally recognized the Monetary Policy Committee as the body responsible for formulating monetary policy and policies for the conducting of monetary operations. Okay. So when we look at this on the evolution of the Monetary Policy Committee of our Central Bank, Bank Negara Malaysia. So this is basically the key milestone over the years. Okay, Bank Negara Malaysia's Monetary Policy Committees had its first meeting 14 years ago. Since then, it has evolved and enhanced its effectiveness as the sole body responsible for the formulation of Malaysian monetary policy and policies for the conduct of monetary policy operations. So when we look at this on in 2002 to 2009, 2008, so this is the time for laying the foundations, where the Monetary Policy Committee was formed in 2002. It is initial form. It was an advisory committee comprising of the senior management of Bank Negara Malaysia that supported the governor, who was the single decision maker of the monetary policy. So the Monetary Policy Committee meeting typically took place for a day, starting with the staff presentation, followed by the discussion among the committee members, and ending with a decision by the governor on the standard on the stance of monetary policy. So the Monetary Policy Committee meet a regular interval to consistently assess the state of the economy and ensure that the monetary policy stance was appropriate given the chances to the outlook for growth and inflation. So that basically the moment, laying the foundation in 2002 to 2008. Okay, and then move with 2009. So this is the time autonomy and institutionalizations. Okay, the year 2009 marked a very important milestone in the evolution of the Monetary Policy Committee, with the enactment of the Central Bank of Malaysia Act 2009, where the Act stipulates that monetary policy shall be autonomously formulated and implemented by the bank, and legally recognized the Monetary Policy Committee as the body responsible for formulating monetary policy and the policy for the conduct of monetary policy operation in the country. So this act also institutionalized and provided greater clarity to some established aspects of the conduct of monetary policy by the bank.
Noraziah, for interrupting you. I would like to inform you that we have less than 10 minutes left before we go to the Q&A session.
All right. So for the simple way, when we look at based on the 2010, okay, so when we look at based on the evolution of the monetary policy 2010 to 2015, so this is the moment of enhancing robustness of the decision-making framework. So in this year, after the global recession, the policy environment of the bank continued to be challenging, arising in the large part from the significant development and uncertainties in the global economy and the financial market environment. So that basically when we look at this on the evolution. The next one related on the issuing currency. Issuing currency, when we look at based on the Currency Act 2020 came into force in 2020, it set out a comprehensive regulatory and operational framework for the managing of currency operations. The new law will complement the existing Central Bank of Malaysia Act 2009. Among others, the law required that any entity involved in the currency process business must fulfill the requirements stated in the currency, okay, and apply to the bank for registration to conduct their business. So based on this figure, Malaysian currency in circulation, CIC, grew by 8% to 162.1 billion in 2002, compared to the record high of 15.1% in 2021. This can be attributed to the public holding less cash for precautionary reason as we transition out from the COVID-19 pandemic. Continued acceleration of digital payment also contribute to the lower currency in circulations, okay, growth, similar to the trend observed in many other countries. Okay, so that basically when we look at based on the currency in circulations. So this figure also, when we look at based on the currency operation, the bank is responsible for the entire currency issuing value chain, including planning, including issuing, circulation, and withdrawal of currency notes and coin. One of Bank Negara Malaysia responsible is to maintain high quality of notes in circulation. This requires the bank to regularly process and remove from circulation units notes that fall below our prescription standard. So the bank also work closely with financial institution and also registered currency position, RCPs, on the processing of the currencies. Okay. So when we look at this on the innovation of the currency, for the importance of the money essentially flows here based on this figure from its being a link between the present and the futures. The evolution of the payment has spanned century. From the bartering system, where people trade goods and services for other goods and services as a mean of payment, to the use of coin and paper money, we are seeing the payment evolve to become more instantaneous and efficient without the needs for any physical exchange of stock. So that's why the fundamentally payment are become more instant, embed with customer journeys. For example, starting with the open money, where a turning point of the financial ecosystem, followed by the buy now, pay later, and its more sustainable features. And then we have the digital wallets and super apps, a one-stop shop of vast capacity. Embedded payment, the future of payment is invisible, and digital currency and the futures of money. So what are the impact of the currency and the futures of money? When we look at based on the impact of the currency on the economy, I came from with the idea about the ringgit exchange rate. Like most currency, the ringgit depreciated against the US dollar in 2022. The aggressive policy rate hike in the US dollar and concerns over a weakening global growth outlook lead to investors preferring US dollar denominated asset. However, the ringgit was relatively stable compared against the currency of nations' major trade partners. So this is basically the exchange rate and the Malaysian's economy, where in 2022, the ringgit exchange rate experienced a period of sustained depreciation against the US dollar. While small movement in the ringgit exchange rate are common, large fluctuate in the level can create lasting impact for business, household, and the economy. Okay. So when we look at this on this diagram also shows about the inflation. What you understand about the inflation? Inflation is a measure of how much the overall level of prices of goods and services in the economy has changed over a period of time. One way to do this is by comparing the cost of things today against how much they were a year ago. Okay. So why it is important to have low and stable inflation? When inflation is low and stable, it means that changes in the overall level of the prices are stable and predictable. This is important because if prices keep changing and are hard to predict, it is difficult for households and businesses to plan how much they can spend, save, or invest. So this will then affect economic activity and growth. Okay. And the last one related on the OPR. What is the OPR? The Monetary Policy Committee set monetary policy by changing the overnight policy rate. So the OPR is BNM's, Bank Negara Malaysia's policy interest rate that influence, among other banks, lending and also financial rate, as well as deposit rate. So this rate tell you how much the cost of loan is or how much the return are for deposit. They are applicable for both conventional and also Islamic financial product. What happened when we change the OPR? Changes in the OPR affect economy activity and overall price level changes, typically by influencing interest rate in economy. When we increase the OPR, higher interest rate on savings and loan will influence people to save more and spend less. Okay. So I think with that, I would like to thank you for your kind listening, and I hope this sharing session is useful to stimulate the mind to think beyond the box and how to see the application of the currency in the world today. Shukran. I hope I hand over the session back to the moderator. Thanks.
Thank you to Dr. Azia. Based on the sharing just now, I believe that it is important for us to know on the revolution of currency, including the evolution of currency, features of currency, the monetary system, monetary policy, and even the evolution of monetary policy. Okay. With that, on behalf of the organizer, we would like to express our deepest gratitude to Dr. Noraziah binti Arshad for extending us new knowledge on the topic of the revolutionary of currency. Without further ado, let us proceed to the Q&A session. For all audiences and participants, if you have any questions, you may raise your hand and turn on your microphone or use the chat space provided to ask the question. Prior to delivering the question, please introduce your name and your university or institutions. Okay, there is question from Fazina.
Assalamualaikum warahmatullahi wabarakatuh. Can you guys hear my voice?
Yes.
Okay. Assalamualaikum and very good morning, doctor and you guys. So I have a question. So my question is there a fixed period for each currency change? If so, what type of currency change will it be in the future?
Sorry, again, the question about what types of?
Is there a fixed period for each currency change? If so, what type of currency change will it be in the future?
In the future. Okay. So, thank you so much. Question from Fazrina. Okay. Thank you so much. Question from Fazrina related on what type of the currency change within the futures. Okay. Basically, when we, I can understand. I can answer based on your question. How I can provide some general insight on factor that can influence currency changes over time, related on the couple of the situation. For example, when we look at based on the economic condition, okay, when we look at based on the economic condition, the currency values are often influenced by the economic performance of the countries. Strong economies tend to have stronger currency, while weaker economy may have a depreciating currency. So that basically when we look at what are the factors that can influence currency changes over time related on the economic conditions. And then just now I shows about the economic situation related on the interest rate, okay, where central bank adjusts interest rate to control inflation and stimulate or cool down their economies. So higher interest rate can attract foreign investor, increasing demand for the currency, and also potentially driven up its values. So that happened when we focusing on the explanation about the interest rate. And then back to with the political stability, the political events the elections or changes in the government can also impact the currency values. The stable policy environment are generally favorable for currency stability. So that basically, I think the idea, what types of the currency changes within in the futures related on that components. Okay, I hope I can answer the question from Fazrina.
Yes, thank you, Doctor.
Right.
Thank you, Doctor, for the answer. Okay, there is question from Shafiq Aiman. Assalamualaikum, my name is Muhammad Shafiq. Okay, there is question from Shafiq Aiman. Assalamualaikum, my name is Muhammad Shafiq Aiman. And the question is, Doctor, what is your opinion about the rate of OPR in Malaysia today? It is okay for our economy, or the rate need to increase to 3.25%, same as the rate before COVID-19? Okay, please welcome Doctor to answer the question.
All right, thank you so much. Thank you so much to Muhammad Shafiq Aiman. Muhammad Shafiq Aiman. Okay, so the question related on the OPR. I stopped the discussion just now by the OPR. Okay, but we need to understand what are the OPR meanings. Okay, the OPR or the overnight policy rate basically is the Bank Negara Malaysia policy interest rate that influence, among others, banks lending and financial rate, as well as a deposits rate. So this rate tells us how much the cost of loan is, or how much the return are for deposit. So these are applicable for both when we look at this on the conventional views and also the Islamic finance product. Okay, so when we look at this on the OPR itself, of course we have the fluctuate OPR rate. So that when the changes in the OPR affect, of course, the economic activities and the overall price level change, typically by the influence interest rate in the economics. Okay, when we look at the value of the OPR is higher, okay, it means that higher interest rate on saving and loan will influence people to save money and spend less. Okay. The reserve happen when we reduce the OPR. Lower interest rate on loans and saving will get people to save less and spend more. So this situation spur economic activity and avoid a situation of falling price level due to weak demand, which will hurt the economics. Okay. So when we look at this on the OPR, the OPR based on the OPR situation for the borrower, what are the impact for the borrower? The impact of the OPR increases on loan repayment, depend on the type of loan. Existing fixed rate loan, for example, which account for about 50% of the total number of the household loan account, were unaffected, while borrowers with floating rate loans face higher monthly installment, where interest rate for new loan are increased in line with the OPR adjustment. Okay. So a key initiative was introduction of the monetary policy, back again the monetary policy, to accompany the statement itself, where the monetary policy is a summary of the monetary policies aimed at improving public outreach by cutting through technical terms. Okay. Why Bank Negara Malaysia, our central bank, use the OPR instead of the exchange rate to manage inflation? More central banks globally, including Malaysia, use interest rate as their monetary policy tools. However, some countries like Singapore, like Hong Kong, use the exchange rate as their monetary policy tool. So the choice of monetary policy tools will depend on the economic characteristic of the countries. For example, how much a country imports and the degrees of the openness to capital flows. In our case, imports account for a relatively small share of what Malaysia households spend on the invest in. So an exchange rate appreciation may not effectively mitigate inflation shock. So managing inflation requires a tool that can direct influence domestic demand, which is why the Monetary Policy Committee used the OPR to set monetary policy. Okay, hopefully I can answer your question related on the OPR.
Okay, thank you, Dr. Noraziah, for the answers. I hope Shafi Aiman can get the point from Dr. Noraziah. Okay, there is a last question from our friends from UUM, which is Zawani. She asked on how does monetary policy work in a scarce reserve system? Please welcome Dr. Noraziah for answering the question.
All right, thank you so much to Zawani from UM. Alhamdulillah, we have participants from UM. To answer your question, how does monetary policy work in a scarce reserve system? To answer this question, we need to understand that monetary policy, we need to understand the monetary policy itself. Monetary policy refer to the action taken by the central bank or monetary authorities to manage and control a country's money supply, interest rate, and overall economic condition. In a scarce reserve system, where a country has limited foreign exchange reserve or face a scarcity of certain key resources. So the central bank monetary policy may need to be carefully to address these unique challenges. Here how monetary policy might work in such a system. For example, when we look at this on the exchange rate management, in a scarce reserve system, maintaining a stable exchange rate could be a top priority. The central bank may intervene in the foreign exchange market to influence the value of the domestic currency. This could involve buying or selling foreign currencies to stabilize the exchange rate. The second one, when we look at this on the import-export control, to conserve scarce reserve, the government might implement import and export control to manage trade flows and reduce the outflows of foreign currency. So this can involve imposing tariff or restriction on certain goods. Okay. Of course, also we need to look at this on the interest rate policy, where the central bank interest rate policy decisions, the interest rate decisions can impact the inflow and outflow of the capital. If foreign investors are attracted by higher interest rate, so the central bank may choose to raise rate to counter capital inflows. Conversely, lower interest rate could discourage capital inflows. Okay. And the last idea, when we look at this on the capital control, okay, capital control itself, to preserve excessive capital outflows and conserve reserve, the government may implement the capital control that restrict the movement of the fund in and out of the country. So this control could include limits on foreign currency transaction, investment restrictions, and tighter regulation on cross-border capital flows. I think hopefully I can answer the question from Zawia just now, right? Zawia just now.
Zawani, Doctor.
Zawani, sorry. Zawani from UM just now about the monetary policy work in the scarce reserve system. All right.
Okay, looks like we have more questions from the participants. I think it will be the last question for the Q&A session, which is from Faris Ismail from Universiti Islam Sultan Sharif Ali, and he is curious on about the types of currency in the world, what are the differences one currency from the others? So I
Okay.
hope Dr. can answer the question.
Okay. All right. So that basically the question from Faris, right?
Yes,
Question Faris about what differentiates one currency from others. Okay. We need to understand that currencies differentiate from each others based on the various characteristics and factors. I can give you some example, some key factor that distinguish one currency from others. Okay, the first one we need to look at based on the country itself, the regions of origin. Okay, each country is associated with a specific country or group of the countries. As in this case, for example, euro currency. Okay, the economics and political condition of the issuing countries or regions greatly influence the currency's values and stability. Okay, so that basically my point. Related on the countries or region of origin. Okay, and then back to the economic stability. Okay, currencies of the economically stable countries tend to be more attractive to investors. Stable economies generally have lower inflation rate, higher GDP growth, and well-managed fiscal and monetary policy. So that happened when we have the economic stabilities, okay? And then reflect with the inflation rate. Inflation rate, a currency from a country with lower inflation is generally considered strong because it maintains its purchasing power over time. High inflation can erode the value of the currency. Of course, can back with the central bank policy at each country. Monetary policy set by the country's central bank, such as just now I stated interest rate decisions and quantity easing, can impact the currency values. Of course, we also can look at based on the foreign reserve. The amount of the foreign reserve, the amount of the foreign currency reserve a country who can affect the stability of its currency and its ability to manage exchange rate fluctuations. So this factor basically, and the last one, related on the technological advancements, innovations such as digital currency, blockchain technology could also influence the future landscape of the currency. So these most factors interact in the complex ways, shaping the values and behavior of different currency in the foreign exchange market. So it is important to note that currency market are influenced by a wide range of variables, and predicting currency movement is challenging due to the multitude of the factor involved. Hopefully I can answer. Hopefully I answer your question from Faris.
Okay, I see there are many questions that need to be discussed. However, due to the time being limited, we cannot entertain all the questions given by the participants. Thank you to our panel, Dr. Noraziah, for the answers discussed during the Q&A session just now. We truly appreciate her time spent sharing her knowledge and opinion about today's topic. On behalf of the organizer, we value the questions and problems that have been given as they further enlighten us on the topic discussed. Okay, now we would like to take a group photo, and I hope all of the participants can open their cameras to capture these memorable moments. Maybe we can wait for 15 seconds for everyone to be on camera. Okay, first we take a photo from the first page. We have 5 page, so we move to the first page first. You ready, guys? You ready? One, two, three. Smile. Dah ke? Okay. Next, one, two, three. Freestyle. Okay, we move to the second page. Okay. One, two, three. Smile. Okay, for the third page. One, two, three. Okay, for the fourth page. Okay, for the last page. One, two, three. Okay. As thank you to all participants. As a saying goes, to every beginning there is an ending. We extend our sincerest appreciation and utmost thanks to our respected panel, hosts, and university colleagues who are willing to spend their time to join this webinar. Representing FEM, I hope that all students can make use of the knowledge that they have gathered during this program for their own benefit in the future. Ladies and gentlemen, well, I believe that we have finally come to the end of our webinar. It has been a great day and a wonderful morning with all of you. Again, thank you for your presence. I hope that all my mistakes and shortcomings can be forgiven. We close this webinar by reciting Tasbih Kafarah and Surah Al-As. All of the participants may scan the QR code that appears on screen to fill the attendance form. A QR code for the quiz related to this slot will be provided to the WhatsApp group of participants for FISM 2023. Don't miss the opportunity to join. Thank you again, and we will see you later in the next slot with the title of Relevant or Not to Make Gold as the main backup currency. Thank you and Assalamualaikum.
Thank you.